Finally, we're going to look at what we call the accounting equation. Yes, I said that principles and assumptions are really important, but the accounting equation is an equation that is based upon everything in accounting. Everything evolves around this equation. And so it has to do with assets, liabilities, and equity. So let me explain. Assets are things you own. These are the resources owned by a business. Liabilities are things you owe. And then there's something called equity. And equity is the right of the owner. So there's also something called stockholders' equity. So the equation looks like this. Assets equal liabilities plus stockholders' equity. So here's my equal sign. Whatever I do over here, if I increase an asset, I have to increase over here. If I decrease an asset, I have to decrease over here because this equation has to stay intact. And what we're going to do in chapter 1 is we're going to look at business transactions and how they affect the accounting equation. So really we're going to add and subtract, but we have to make sure we do the same thing on both sides. And when we look at this, what we're going to do is we're going to actually look at we're going to look at business transactions. So we call a business transaction is anything that a business does that changes its financial position in any sort of form or way or manner. So we're going to work on a spreadsheet. And if you get a chance, you can actually look at the analysis of transaction sheets that I have in the file. That's analysis of transaction sheet. This is what we're going to be working on here. So you can get one out. I'll wait for you to stop. I'll stop and wait for you to get it. Analysis of transaction. You can download it from the files in Canvas. Okay, so if you've got your sheet out, the first thing we're going to do is we're going to look at each transaction and we're going to put a letter attached to it. So on November 1st, Chris Clark deposited $25,000 in a bank account in the name of Net Solutions in exchange for common stock. So Chris is the owner, Net Solutions is the corporation. So if you notice your sheet, you'll see that it has assets on the left side, and you should have cash written up there. And stockholders' equity might also just be called equity. I'm not sure what I have on that sheet. Actually, I think I have it called capital stock. I say common stock here, but on the sheet I believe it says capital stock. So on the very first line of your sheet, you're going to add $25,000 to the cash because the cash account is actually being increased by $25,000 in exchange for common stock. So on the very same line, you're going to go over to where it says common stock or capital stock and put plus 25,000. And so your sheet should have the first row plus 25,000 under cash plus 25,000 under common stock. Okay, now we're going to go to the next row, which is going to be transaction B. By the way, you can put the letter A right here. You can put it out in the actual margin of the first row. Okay, here's transaction B. On November 5th, we paid $20,000 for the purchase of land as a future building site. So the minute I spend money, I'm subtracting from cash. So on the very second row, put the letter B out in the margin, put minus $20,000. Then we bought land. Okay, so you don't, under assets, you only have cash and accounts receivable, I believe. So up at the top next to them, there's two blank spots. Put the word land in, and you're going to add 20,000. So I spent 20,000 cash, and I bought an asset, something I own. Okay, do I need to do anything to this side? No, my equal sign is here. The net change on this side of the equation is 0. Minus 20,000 plus 20,000 equals 0. So right now you should have B on the second row. And then on the third row, I want you to run a balance. See these numbers down here? Do not put them on your sheet. So on your third row, write the word BAL out in the margin. And I have 5,000 cash. I own land at 20,000. And I have common stock total at 25,000. Do not put these bottom numbers. So you've used your first 3 rows so far. Okay, now from now on, after every transaction, we're going to run a balance. Okay, now you should be on the 4th row. We're going to go to transaction C. Let me read it first. On November 10th, Net Solutions purchased supplies for $13.50 and agreed to pay the supplier in the near future. Accounts payable is the name of the account when I owe people money. Okay, when I buy on credit, it's accounts payable. It is a liability. It is a debt that I will owe. When I buy things like supplies that I will use in the future, they're called prepaid expenses. So on row 4, write C out in your margin. Right next to land, it doesn't make a difference which side you put it. Write the word supplies at the top of the header. So you increased your supplies by $13.50 and you increased your accounts payable by $13.50. Don't worry, guys, when we get to the end of these transactions, I will show you what the whole sheet should look like. And on the next row, you're going to write balance, and you're going to bring how much cash down, how much supplies down, how much land, how much accounts payable, what my common stock is. Okay? So next we're going to move to transaction D. Do not skip lines. Transaction D has to do with providing a service to a customer or selling a good. It's called a revenue when I do this. So for transaction D on November 18th, I received cash of $7,500 for providing services to customers. Always follow the money. When you get money, you add it. When you spend money, you subtract it. 95% of the transactions will involve cash, so you want to make sure that you follow the money. So here's D transactions. Here's my balance from above. I add 7,500. I might have said 75,000, but I add 7,500 here, and I go over here to this side, and under the revenue at the top of the paper, you're going to call it fees earned. Fees earned is the account name for me generating revenue. And when you're done, you're going to run a new balance right below. So now I have 12,500 cash. You bring every account down, you bring every balance down, even if you didn't touch that account. I have 1,350 in supplies, and I own land for 20,000. I owe 1,350. I have common stock for 25,000, and I now have fees earned of 7,500. So just so you understand that fees earned is the account name when I'm providing service. When I sell a product, it's going to be called sales. Accounts receivable, let me just talk about this right now. Accounts receivable is when I sell to a customer on credit. They're going to pay me later. So accounts receivable is when customers owe me. Remember, accounts payable is when you owe somebody else. Okay, we're going to stop here, and on the next video, I'm going to pick up at transaction E.